here, Carol, on another brutal day.
Yeah, exactly. Another day of selling, right? And so it just seems as long as those tariff headlines continue or tariff threats continue, that we continue to see stress on Wall Street because you're just seeing it clear across the board. Matt, do you have anything to say?
Yeah, well, no, for sure. I mean, I've been watching these markets all day. We're looking at, I guess, a correction almost near as damn it to 10% off the S&P 500 highs. Obviously, we're already there on the Nasdaq. My question is, when are we going to know the bottom? I don't know if you guys have seen this chart on the Bloomberg 3116, but what it shows you is the Nasdaq 100 has had huge volume today. And when we've seen more than 75 million shares traded over the past few years, you always see a bounce. That is the bottom, and we're seeing that indicator today, so maybe this is it.
I like the note that I read from Dave Lutz over at Jones Trading saying markets occasionally like to find people's pain thresholds, and at the moment, the market is trying to figure out what President Trump and Secretary Bessent are, basically.
And you have to wonder, is that a 15, 20% move in the S&P? Like, is the Trump put there? It just ain't there at 10%.
Yeah, certainly not here. And the real key number that you're looking for right now is that 10% correction on the S&P. Basically, a close below 55.30 would effectively mean that. It takes a while for these numbers to settle, but right now we're right around 55.21 and change, down about 78 points or 1.4% on the S&P 500. Should that number hold, that means the S&P will have drawn down a full 10 percentage points from its all-time high that was set just back on February 19th, which was just 3 weeks ago yesterday. The other indices also taking the punch as well. The Dow Jones Industrial Average down more than 500 points or 1.3%. The Nasdaq Composite down more than 300 points or 2%. And the Russell 2000 is going to lose about 33 points on the day or 1.6%.
All right, everybody, and just digging a little bit deeper into what we saw in the S&P 500, 372 names to the downside on this Thursday and 131 scarlet to the upside.
All right, let's take a look at the IMAP. There's a lot of red, as you'd expect, but there is a little sliver of green there, and that's mainly in the utilities index. Too bad it's one of the smaller sectors in the S&P 500. The actual smallest is materials, and that group is down by 0.1%, also outperforming the broader market. In terms of big decliners, 3 groups finishing down 2% or more. You have communications services, consumer discretionary, which includes home builders, retailers, and automakers. And then you have the real estate investment trust group down, again, 2%.
All right, guys, to the individual gainers, a lot of red on that IMAP, but I did find some gainers. Intel, clearly one of the big movers to the upside in today's trade, up as much as 18.6%, finishing the day with about a gain of 14.6%, top gainer in both the S&P 500 and the Nasdaq 100. Of course, we know we got the news late yesterday about the chip maker naming Lip-Bu Tan as its new CEO, so succeeding to interim co-CEOs. We did have B of A upgrading Intel today to neutral, citing Tan's solid track record. There's still a lot of questions about the future and what Intel looks like going forward, but as our own Ian King reminded, still a big market cap and still a company with about $50 billion in revenue.
No, it's a small market cap. It's only $100 billion.
It's not that small.
Compared to other chip makers we talk about?
So maybe it's a smaller chip player, but he said, don't count it out. All right. Just wait your turn. All right. All right. Let's get to 2 other names. Dollar General up about almost 7% in today's session. This was a top name in the S&P 500. The company came out fourth quarter comparable sales, comp sales, topping Wall Street expectations. Analysts also say its annual outlook likely better than some investors feared. And so we did see that name move higher, up about just shy of 7%. Also bringing up Dollar Tree, that was up about 6.5% as well in today's session. And another name we don't say it much, Fabrinet, up almost 11% in today's sessions. It makes optical components used in data centers, and it did rally after entering a warrant agreement with Amazon to buy up to almost 383,000 shares. So that got that one moving in today's session. Again, up about 11%.
I'm just looking it up. Fabrinet, you say?
Fabrinet. FN is the ticker.
Fabrinet.
Yeah, it's about $8 billion market cap.
$8 billion. So not nearly as big as Intel.
Correct.
I'm looking at Adobe. Last time I checked, it was the biggest loser on the S&P, both in percentage terms and in points. It gave an outlook that was mixed relative to expectations. And actually, BI, Bloomberg Intelligence, said their guidance for 11% growth in annual revenue, recurring revenue for its digital media segment was encouraging. But KeyBank, Bernstein, Stifel, Mizuho, they all cut their price targets. And Evercore wrote that the report wasn't strong enough to change the narrative around the stock. So that's a big loser today. Ulta Beauty, I could have chosen, by the way, any of these real consumer-facing companies. Airbnb and CarMax as well got hit hard today, but Ulta is coming out with earnings momentarily, so I thought it would be a good one to focus in on. There's a concern that their guidance from January is at risk now because of the steep drop in let's say consumer confidence after the holiday season and in the beginning of this Trump 2.0 term. That's according to Bloomberg Intelligence. The beauty industry, like all of these big consumer-facing businesses, has been hit by so many things: wildfires, weathers, illnesses. Raymond James is concerned about illnesses. It'll be the first earnings report, the first earnings call for Ulta's new chief executive officer, Kecia Steelman. So we'll see how that goes. And then Cummins. I could have picked any of the big diesel motor makers or diesel truck makers. And this is kind of counterintuitive, but the EPA is reconsidering regulations on vehicle emissions, as you would expect in the Trump administration, rolling back nitrogen oxide emissions. It would significantly reduce, I guess, climate protections, and you would think, oh, that's good for these big diesel makers. But the pre-buying for heavy trucks was expected to be much bigger because of new regulations. And if they don't put those new regulations into place, nobody needs to buy a new truck.
Well, yeah, and also, Matt, to that point, a lot of these companies were already sort of changing what they were providing and producing to help that as well.
Ulta Beauty, they are out with their earnings. Matt was just talking about them, and it is a big beat on the bottom line, at least. Fourth quarter EPS, $8.46 a share. The street was looking for $7.12 per share. Net sales, though, that was relatively in line with estimates for $3.5 billion. Comp sales on a percentage basis, the growth there was 1.5%. The street was looking for growth of about 0.8% here. So a beat on the bottom line, a significant beat, it will, in terms of the growth in comp sales, although the aggregate number on net sales at the top there pretty much in line with estimates. And here's your forecast now crossing the wire. For the full year, the company says its net sales will be in a relatively tight range of $11.5 to $11.6 billion. The street on average was looking for 11.6, so basically guiding relatively in line with street estimates.
All right, let's take a look at Rubrik as well. Enterprise software company, does some cybersecurity. It is moving higher in after-hours trading by a lot, up 15% after its first quarter revenue forecast beat analyst estimates. It sees first quarter revenue of anywhere from $259 million to $261 million. It's a pretty narrow range, but analysts were looking for $243 million on average. In terms of the full year subscription, recurring revenue, $1.35 billion to $1.36 billion. Again, a narrow range, but higher than what analysts had anticipated, which was $1.31 billion.
All right, let's get to Docusign. That stock down about 7%, 8% here in the aftermarket. It all has to do with the outlook. First quarter revenue, Docusign expecting $745 million to $749 million. The street estimate was for $757.2 million. This, again, is their first quarter revenue outlook, so some disappointment, and that is putting pressure on the stock. Looking to the fourth quarter, the quarter that just happened, we saw fourth quarter revenue. That was actually beat at $776.3 million. Fourth quarter EPS, 41 cents a share versus 13 cents year over year. Adjusted EPS for the fourth quarter, 86 cents a share. That was a penny better. But it's all about that first quarter revenue outlook. And you are seeing, wow, the stock actually now up about 2.5%. So a lot of bouncing around here, despite that miss in the forecast. We'll keep an eye. It's now down another 6%. So a lot of volatility.
All right, bouncing all around there. I want to just take a quick look at the bond market here because we have a lot of auctions that happened this week, and they actually went pretty well. And we saw some buying come in today. The 30-year yield had $22 billion worth of issuance. The takedown was just fine. And it makes sense, guys, as we see this volatility, just take a look at earnings, and we see the decline, and we see the S&P in correction territory, that bid for the bond market continuing.